Now, let's talk about the distribution phase, because the distribution phase is something that you really need to be able to recognize. In fact, being able to recognize distribution is more important than being able to recognize accumulation. Now, why is that? Accumulation and distribution look similar on a chart. The difference is distribution is there to pull in suckers to buy stocks that are about to fall, and I don't want you to be a sucker. Let's talk about what distribution looks like. During the distribution phase of the stock life cycle, there's going to be increased volatility. Now, volatility is the percentage difference between the low trading price of the day and the high trading price of the day. That swing in prices is volatility. Now, some stocks are more volatile than others, so volatility is always relative to the stock's own market actions. If a quiet stock suddenly becomes loud, that's an increase in volatility. If a loud stock remains loud, that's basically the same. Nothing's changed. If a loud stock goes quiet, that's a decrease in volatility. If a loud stock gets louder, that's an increase in volatility. So it's all relative. When you see it on the chart, it stands out. It's going to scream at you that something has changed in the character of the trading of this security. So volatility. On-balance volume begins to move lower. At the very least, it's not going to make many more new highs. Price may still move higher, but the price action itself is going to look different, and it's going to fail when it makes a new high. It will spike up, stay a day, fall back down. There's no follow-through during the distribution phase. Eventually, what's going to happen is that successive lows are going to take over. So price is going up, going up, going up, dips, there's a low. Then it goes up a little bit more, gets kind of volatile, makes a lower low. That's characteristic of the distribution phase. During this stage, what's actually going on is the Wall Street manipulators who control the prices of these stocks are finally unloading all of their inventory, and they're going short. And so they need to maintain an excitement level for the general public to continue buying stock that they're selling to them short with the anticipation of the coming markdown phase. Once the market manipulators have distributed all of their long stock and sold short as much as they care to carry, they will cease to support the price of the stock. And then the bad news comes. The CEO retires. Oh, this quarter wasn't as profitable as they thought. The new product kills people. Doesn't matter what it is, but the bad news is going to come. At that point, the general public becomes fearful, and they no longer bid the stock up. And because stocks trade in an auction environment, if no one's bidding to buy it, the prices will slowly fall. Let's take a look at another chart. So here we have a smile, we have a markup phase, and then we have this violent churning of prices that just looks different than the rest of the price activity. And the reason it looks different is because it's a different phase, where the stock is quiet and moving sideways with rising on-balance volume. That's an accumulation phase. While the price is steadily rising, that's a markup phase. When the price becomes volatile and doesn't make any more new highs, that's the distribution phase. Now, I didn't trade this particular stock, but had you traded it, if you were using the system that I teach, you would have bought it somewhere in this general area. As the stock went up, you would have placed your sell orders behind the rise in price. Boom, boom, boom. Which means, had you been doing what you were supposed to do based on the trading system I'm teaching you, on this huge day right here, your position would have been closed out. Now, depending on where you got in, you would have been closed out at a profit or a loss. If you would have bought this markup phase late, you probably would have lost money. If you would have traded it the way I tell you to trade it, which is to catch it as it moves out of the accumulation phase into a base or the markup phase, then you probably would have done okay. But the point is, when the stock moves into distribution, you're going to be able to see it. On balance, volume stops going up, price action changes. This stock is just screaming that market conditions have changed.